everyone, it's Austin Solomon, the Solomon Group at Coldwell Banker Action. Welcome to this week's episode of the Real Wausau Real Estate Show. Today is June 6th. Happy summer, everybody. It's exciting to see the weather shape up and for things to be able to enjoy the outside activities and get out there and enjoy the weather and the beauty. So today we're talking about the market. It's early June. What's happening in the market? What are my 2 cents on the market and where we think things are going to be heading in the future. So in general, just a little bit of an overview of the Wausau market. So right now there's about 300 homes, single family homes in the greater Wausau area. So kind of like Marathon County area. Of those, about 230 are under contract, leaving about 70 to 80 homes that are available to purchase, right? So, so a little over, 60-70% of the homes are under contract, and leaving about, a little less than a third available for purchase. So still pretty low inventory. For reference, back in like the summer of, typical normal market, summer market, we'd probably see like 400 to 500 homes on the market. So again, being at 300, we're still a little bit low. But that has improved from just a few months ago where the inventory was around like 200, 225. So we've seen more homes come on the market here in the last couple of weeks and months, which has been good. As more homes come on the market, there's more options for buyers, right? And so the attention is divided a little bit more. You're not seeing as many crazy bidding wars where you have like 20 offers on one house because, again, there's more inventory. Buyers have options. A question I get asked a lot is, how are the interest rates affecting the market right now? So interest rates, again, the last few years, have been historic lows, right? Ranging from, 2.5 to 3 for a 30-year fixed rate mortgage on average. Some people even got better than that, which is fantastic. Right. This year we've seen interest rates climb up quite a bit, faster than most people expected, and a lot of lenders and experts have expected. They've jumped up. So right now they're sitting at about 5.25% for an average 30-year fixed rate, and expected to go up in the future. So obviously interest rates do affect buyers, especially when you're purchasing a house. If your loan amount's a couple $100,000, right? That does have a pretty substantial effect on a monthly payment, right? So from every $100,000, like 1%, it's right around $60. So it can make a pretty big difference if you're jumping up 3 points, 3%, right? And your loan amount's like $300,000, like that's pretty substantial. So interest rates do affect affordability, and right now the benefit of buying a house now versus in a few months is potentially locking in a better interest rate. Most people, experts, predict that the interest rates are going to continue to go up, right? So the incentive to buy now would be to take advantage of a better interest rate. On the same token too, my pulse has been, and again, this is just my intuition and my observations, but I think there's kind of a general consensus that things are going to kind of taper down just a little bit and soften, right? Which I think is legitimate. Last fall, we had a very large softening in the market. And again, we wouldn't have been able, it's hard to tell that in the moment, but looking back, like last fall was actually a great time to buy a house. So I would expect that this late summer and fall is going to be similar as buyers kind of, as the current buyers in the market are finding homes, right? And interest rates continue to go up. I would say that the market's going to soften. What does that mean? I think that it'll be more of a balanced market where you have an appropriate, like a balanced number of buyers and sellers in the market, where traditionally in the last few years, it's been so heavy on the buyer side and so few on the seller side, right? Well, what changes that? Over time, if the amount of sellers increase, right, and the amount of buyers decrease, then that's what causes a market to be more balanced. Well, what causes the buyer pool to decrease is buyers finding homes and Also, fewer buyers coming into the market. Well, with interest rates going up, fewer buyers are coming into the market or have incentives to come into the market, right? So you pair that, fewer buyers coming into the market and buyers finding homes now with sellers, right? More homes coming on the market and sellers having, favorable selling conditions, right? The general consensus is that the market will be more balanced moving forward. So what does that mean? Like, my predictions would be like in 5 to 6 months, the market's still going to be good. I don't think that values are going to just all of a sudden drop a substantial amount. They might taper down just a little bit, like, to put that in perspective, like maybe 3 to 5% from maybe the peak of the market. But nothing that's so substantial where it's like 2008 where things drop a ridiculous amount, right? That's my 2 cents. Obviously, no one knows. I wish that we could have clarity and know that, but just based on the data that I've put together and kind of some of the experts out there, this is my intuition would say that's kind of my prediction. So what do you do with that? Well, as a buyer, I think it's going to be easier to buy a house, in 3 to 5 months, just based on where things are going. But I also would say that the interest rates are going to be a little bit higher, right? So there might be less competition in 3 to 5 months than there is now, but the interest rates might be a little bit higher. So there's some pros and cons. I don't think that there's going to be steals of deals to be had in the next 3 to 5 months. I just don't see that being the case. For sellers, I think if you're selling a house, you might consider that, hey, sooner than later might be better, because things probably are going to taper off a little bit, and there's going to be more options for buyers, in a couple months than there are now, right? So I think for sellers, I don't think holding off for higher prices and a better sale prices is, I just don't see that happening. And who knows? Obviously, no one knows. It's an interesting place out there. But these are just kind of my 2 cents on the market. So if we wrap this all up, kind of the 30-second summary is, for a seller, if you're thinking about selling, right, sooner than later, I don't think if you did wait till spring or fall or late summer, I don't think that's going to be like catastrophic. I don't see the market taking a drastic turn or like a drastic drop in home values dropping all of a sudden. So that's kind of my thoughts for sellers. For buyers, I would say that, right, the advantage of buying a home sooner than later is trying to lock in, a better interest rate versus, in 3 to 6 months. Again, that could climb up another half of a point to which, the affordability is a little bit less. You're paying more for the same house. So, but I also think competition-wise, it'll be easier to buy a home in 3 to 6 months than it is right now, because the climate is still pretty competitive. Not like it was in the spring, where it was like on average you might have seen like 5 to 10 offers. Right now it's maybe like 2 to 6 depending on the house. But it's a little easier to buy a house now than it was 3 months ago, and I think we're going to continue to see that trend, moving forward. So, this was a long-winded episode. I hope you guys enjoy this, and we'll see you on next week's episode of The Real.